Okay. Got it. Okay. Thank you. Yes, my name is Tim Hearn from RDG and Partners CPAs, and I am going to take a few minutes just to go over our draft of our financial statements for the fiscal year-end review as of June 30th, 2021. The first two pages, or first page, first two pages are our report. So this is basically just saying that we did a financial statement review. We did not do an audit. The audit, the objective is to provide assurance on the financials. We look at invoices, we look at statements. Our review, which is required for the library, is really just more inquiry and analytical procedures. Okay, so that's, but based on those procedures, the numbers within are there's no material modifications that need to be made to them, is really what this is saying. Page 1 of the financials are the balance sheet for the organization. Right here are your total assets, which went from at the end of June 2020 to the end of June 2021, just under 1.4 million to about 1.476 million. So about an $80,000 increase in total assets. Where that increase and decrease came from, you'll see your cash balance year over year did go down about $96,000. That's really because last year you had received a grant for the HVAC, and the money was received and sitting in your bank account last year, but it was actually spent this year. So that's why your cash balance went down. And then kind of vice versa, your property and equipment, which is where the HVAC repairs lay, you can see that went up pretty significantly. That went up about $170,000. So those are the two big increases, and the net is an increase because your property and equipment went up more than your drop in cash. So while your assets went up, your liabilities went down pretty significantly. Here's your total liabilities. So it went down about $430,000. Really two big areas, your deferred revenue. And this is the cash that was received last year for the HVAC grant. That wasn't recognized as revenue last year because you hadn't actually spent the money yet. You got to recognize the revenue once you spend the money. So that was deferred as a liability last year, and that went away and was recognized as revenue this year when you spent the money. And then the other big one is really a liability that you don't necessarily, well, you don't control, and that's your pension liability. So the library is part of the New York State pension. That's a multiple employer pension, whereas you're on the hook with everybody else in the pension for a projected liability in the future, which varies based on actuarial assumptions and the value of the investments that are withheld within the plan. So last year, it's as of June 30th, COVID hit, middle of March, and then investments kind of tanked for a while, right? So the investments versus the projected liability, there was a big gap there, and that's why you have a big liability here. The investments, the overall market since has not only rebounded, but actually appreciated pretty significantly. So now that liability really is kind of hardly nothing. Like the investments are pretty much in line with the projected future payouts in that liability. So there's a big drop there in the liability of what you're responsible for. Net assets, which really are your assets minus your liabilities, is 1.37 million compared to 851,000. That's kind of like the book value of the organization. So that's a pretty big number. That's a good number. 1.37 million went up significantly because your assets went up and your liabilities went down. What comprises this 1.4-ish million? $1 million of it is kind of tied up in property and equipment, the building. And then the other 400,000 is in liquid assets, right? It's your cash, your CDs, kind of minus your liabilities. So if you think about what's liquid of this 1.4 million, about $1 million of it's tied up in the building, and the rest is kind of in your bank account, essentially. But your balance sheet did get a lot stronger this year, again, mainly because that pension liability dropped significantly. And just stop if anybody has any questions. Next page is your statement of activities, change in net assets. So this is your revenue and expenses for the year compared to last year. Here's your total revenue for each year, went from 739 to 911. So you'll see a pretty big increase there, about $170,000. Really, that's all in this grants line. You see grants went from 9 to 178, so that's about $170,000 increase there. And that's grants related to the HVAC. So that's really kind of one-time grants that were received. Some of it was received in cash last year, but recognized this year, and some cash was received this year as well. So that's really the story. Every other revenue line is pretty comparable. Expenses went down. So even though your revenue went up, which is what you want, your expenses went down, which is what you want. Your expenses went down about $18,000. If we look at where the big decrease is in your salaries and benefits, that went down about $36,000. Had some people retire, some clerical people, your IT manager. So you were down headcount wise. You had less employees this year compared to last year. Other than that, you had some other smaller increases that offset the drop in salaries. You'll see your adult services here. A lot of that was just supplies related to COVID, sanitation, cleaning supplies, stuff like that. Administrative expenses had a little bit of an increase there. Insurance was up. There was some fees to us, some one-time fees last year for some new accounting standards. So those increases offset the salaries decrease a little bit, but still we're down net $18,000 in expenses. So your operating income was $205,000 compared to $14,000. Obviously, a big jump, a significant profit this year, which a lot of that has to do with that grant for the HVAC, because the way that works is the grant shows up as revenue, but the expenditure of that grant shows up on the balance sheet as property and equipment. So it doesn't show up as an expense on here, right? If it was an expense, then this profit would be a lot less. So it's not a cash profit. This cash wasn't necessarily sitting in your bank account, but on the P&L and the profit and loss, it shows up as a profit. And then you have your other income expense, which is the change in the pension liability. So last year you had a big expense because your liability went up. And the other side of that was an expense, again, because the investments kind of tanked. This year it's the opposite. Because your liability went down significantly, it actually shows up as income on this statement. So when you add that, now you're changing net assets. Your profit for the year is pretty significant at $519,000 versus a loss of $219,000 last year. We'll see in a couple pages that this doesn't mean this was all sitting in your bank account. Really, the change in pension liability, that's all non-cash. That's really just kind of an accounting entry. And then most of this got spent on the HVAC. Okay, does that make sense? Next page just breaks out your expenses again into program management in general, but I don't think we need to look at these again. Most of it's program related, which is good. Here's your statement of cash flows. So this gives you an idea of kind of cash in, cash out. Your net cash flow from operating activities was $132,000 versus $200 the year before. So that actually dropped a little bit, mainly because a good chunk of that HVAC grant was actually received in cash the year before. And then down below is how you spent that money. So you brought in 132. You actually spent 227, mainly on the HVAC. So you spent more than you brought in. So your cash balance actually went down $95,000 during the year. Now, some of that is because some of that HVAC money, again, you received in the prior year. So really, when you look at the 2 years together, you're up, but just this year, you're down. Started the year with 516 in the bank account, ended the year with 420. Okay. So that's the numbers. That's the financial statements. The rest is the footnotes of the financial statements, which just give a little bit more detail on the numbers themselves and the organization. So I'm just going to quickly go through these. Number one, footnote 1 describes the organization. Number 2 is all of the significant accounting policies of the organization, which is a long footnote and one that I don't think we need to go over. There was no new policies that were required to be adopted, no changes to any existing policies. So all of this really is the same as last year. And a lot of this is standard wording that's in every set of financial statements, obviously tailored toward your organization. But this is a long footnote. goes all the way to here, footnote 3, which is your endowment, which again, this has not changed either. So your endowment remained with the board designated as without donor, and then the with donor restrictions of 16,610. That hasn't changed year over year. Note 4, liquidity and availability of resources. This footnote is meant to give a reader an idea of how liquid the organization is. So really these numbers come from the balance sheet, but you could have a really strong balance sheet, but it could all be tied up in, let's say, a building, which kind of somewhat yours is. This is just, okay, what are our liquid assets? And they're really your cash and your CDs that are maturing over the next year. So that's 438,000 of liquid assets, which again is less than last year because your cash balance was less. And then it backs out which of these are restricted, which is really your endowment that we just looked at, board designated and net assets with donor restrictions, to come down to the financial assets that's available to pay off liabilities or pay for expenses over the next year. So that is a healthy number, 420,000 for an organization your size. It did go down from last year because, again, you used some of that cash for a long-term non-liquid asset, the HVAC. Note 5 just discloses your CDs that you have. There's 2 of them, how much they total at the end of the year, which was pretty much the same as last year, and the interest rate. Note 6 is a little bit more detail on the property and equipment. Here's your kind of gross amount for the 2 years, less what's been depreciated so far to get to the net amount that's on the balance sheet. You'll see the big increase in building improvements. That's the HVAC. Note 6 is your donor restricted net assets. Years ago, there was a donation that was restricted library books, of which $500 is getting released and spent every year. So there's still 3,935 left on that. This was restricted. So some of the HVAC was actually spent last year, which was restricted, but then that all got released this year. Concentrations, 77% of your revenue was from tax assessments this year, 95% last year. Your tax assessments number was pretty comparable. It's just that your total revenue was higher this year with the grant. That's why your percentage is lower. Note 9 is a lot of disclosures on your defined benefit pension plan that are required to be in the financials. A lot of them are, I don't think, that useful for the board to know, but here's kind of a description that you're participating in the New York State and local employees retirement system plan. Again, multiple employer retirement system. I think this is worth noting. This is your contributions to the plan. So that is actually true cash. There's a lot of actuarial assumptions in the accounting for these plans, which is that pension liability that we looked at. But you're contributing about $50,000 a year on a cash basis to the plan. Other than that, these are all just kind of the actuarial assumptions that go into calculating that minimum pension liability, which, for budget purposes, really, there's nothing that the organization can do. It's really just an accounting transaction that has to happen. I don't think we need to go over these in great detail. And these are all given by New York State, given by the pension plan itself. And then the last footnote, footnote 10, is just a standard footnote that's in every set of financial statements right now. Just that there is still some risk and still some uncertainty in regards to COVID. That's still around, and there still could be some potential financial impact down the road. Again, that's not unique to the library. That's just in every set of financial statements right now. So that's it. I know that was relatively quick. Any questions at all on the footnotes or the financial statements, the numbers within themselves? I mean, it was a great year. I mean, just to sum it up really quick, the story of the statement of activities is that grant, and again, the numbers look better here than they really are cash wise because the money was spent, but you ended up with a new HVAC unit out of it, right? So the balance sheet looks stronger. So it definitely was a good year financially, especially with kind of COVID still around through a lot of the year. That's all I had.
Do we need to move to approve or to accept that report?
Yeah.
I'll make that motion that we accept the report as prepared and presented tonight by Tim Hearn and the name of the company.
And I'll second the motion. It's Marty.
Thanks.
All in favor?
Aye.
Aye.
Anyone opposed? Okay, it's passed. Thank you so much.
Okay, thank you, everybody.
Have a
Tim,
good-
do you
Have a
want
nice
to-
evening.
Thank you. Bye-bye.
Yep, take care.
Okay, back to the agenda. Adoption of the agenda.
I'll move we adopt the agenda. It's Marty.
This is Kristen. I'll second that.
Okay, is there any discussion? All in favor?
Aye.
Aye. Any opposed? Okay. You should have gotten the minutes by computer, by email, for October 21st, 2021. Do we have enough people to entertain a motion to pass those or not?
Maybe. I can move that we approve them and then we have to figure out who wasn't there.
Okay,
Wasn't.
can we have a second?
Motion, Marty.
Okay, discussion. Who was not there?
Deb.
Deb, okay. 1, 2, 3, 4. Well, that still gives us 5, right?
Yep.
Okay. All in favor of passing the minutes?
Aye.
Aye.
Anyone, any nays? And there's 1 abstention, correct?
Yep.
Okay. It's passed. All right, we had our first financial review. We need a motion to pay the bills for October 2021.
This is Marty. I'll make a motion that we pay the bills for October 2021.
I'll make the motion, Miss Elizabeth.
Second, Elizabeth.
Second, okay, I'll second.
And are there any unusual items for this time, for October?
Just the retirement
Okay,
for, the year.
okay. Does anyone have any questions or is there any discussion? Okay, all in favor?
Aye.
Aye.
Anyone opposed? Okay, that's passed. Library Director's Report.
I'm having a hard time tonight. I'm sorry.
Well, if you don't feel good, that doesn't help either.
I had everything up, so I was prepared, and now it's just, it's not working as good as I'd like it to. Like, I want to put the share screen, and I just can't seem to do it. But anyways, I went to NYLA. That's the, what do you call it? The majority of what I reported on. And NYLA was partially online this year and partially in Syracuse. So if it looks like I did a lot, I did. It's a whole page worth of stuff. So on the 22nd, some girls drew Sharpie all over the front sidewalk,
Oh dear.
and their parents want a bill for how much, it costs to remove, and we haven't gotten to the point where we can figure out how to remove it yet. Randy futzed around with it a bit, and then he called Clean Green, who was going to be doing our plowing, and he said oven cleaner, and I was like, okay. So he's going to try that. Judy bought him the oven cleaner. I don't know if he's tried it yet. And I'll report back on how that's going. I'm hoping it just disappears over the winter. But, in order to give the family a bill, I gotta, whatever. I'll just do how many hours Randy played around with it. So far, he's probably futzed with it a couple hours. Very frustrating.
I have a suggestion. maybe instead of a bill, we could suggest that the parents donate something to the library, some
Yeah,
money.
well, it's not gonna be the girls are, I don't think we're ever gonna see any money. It's a bill to the girls, I don't know, we'll see what happens with that, but first I gotta come up with something. But I could say, can you donate such and such towards this? And maybe that would happen. So we'll see.
I think there's some stuff called graffiti off that they use at the schools.
Okay,
So,
I'll
graffiti
mention
off,
that.
I don't know where you get it.
Part of the problem is if it has muric acid in it, and Randy doesn't want to use that, and I don't blame him. It's pretty toxic, so,
Yeah, and I don't know what's in it, but
yeah,
it's a spray that they use, but
yeah.
Maybe whether you get money or not from the girls, it's worth hiring someone to come and do it. Number
Oh,
one,
yeah.
it's really not part of Randy's job. And then you have an invoice, and then,
Yeah.
some point that might affect how they
Well, that's
behave.
what I was saying. I don't think Clean Green, he suggested oven cleaner. He didn't say, yeah, I'll come over and take it off there. I'll ask again. So
Yeah,
that's what's going
I
on with
think that
that.
we don't want our sidewalk, our
I know,
cement.
it's just so
We're
frustrating.
too nice right now. Yeah.
So, it's been a month now and we're
I
still
use
struggling with
hand
it.
Maybe-
sanitizer in my
Were they
classroom.
turned into the police?
Yes, I had to
Okay.
call the police because of course they didn't know their parents' phone number and all that stuff. So, and then, this goes on. Next thing, when I went to get the film, because the parents wanted the film, because the girls, they're sisters, and they were arguing over who did what.
Oh,
And the DVR seized up.
oh no.
Yeah. So I saw the film and then it seized up, never more. So then they had to reload the hard drive on it. And so I didn't want that to happen again. So Covert came and replaced the DVR, and we put in one more camera that looks down the walkway next to the bathrooms, so we can see who went in and left the bathrooms.
Mhm.
So that's about $1,800 he told me it was going to be, and we should be all fixed up now with the camera and all that. So that came of the Sharpie incident. So
Oh my goodness.
it's really
This,
aggravating.
Angela, this is Kristen. Just so you know, two things I've used in my classroom.
Mm.
I've used certain brands of hand sanitizer and let it soak. It's taken it off a desk.
Yeah,
And
but
rubbing
that's a desk,
alcohol,
not
I'm just saying,
concrete.
rubbing alcohol is another thing. I mean, you have to let them
Mhm.
soak on there, but
But
I know what-
concrete's porous. That's the
Yeah.
difference.
it's hard to get it off. Yeah, I understand.
Yeah, it's just so we'll keep playing with it.
What about, I'm thinking I don't know about our sheriff's department, but would maybe the state police have some idea? Because, I'm
Yeah.
thinking about the graffiti that happens, especially in the cities and stuff like that. Not that we don't get our share of graffiti, but that they might want to remove. Maybe
Yeah.
they would know of something you can use or who to
Yeah.
contact that could remove it.
I'm gonna talk to Clean Green myself and see if he'll come over and, he just
Or
talked
maybe
to
some other
Randy.
company if he's not able to do it. you
Right,
could-
or suggest, somebody.
Could probably have it painted over. There's cement paint.
Oh, no. Oh, no.
Is it nasty or just?
No, it's not. Thank
Oh, okay.
goodness. It's not.
Okay.
It's a human outline and a big heart and a name.
Oh, okay.
So
Okay.
thank
least
goodness
that's
there's
not-
that one thing.
Yeah. Okay. You got anything else?
We're still working on rearranging the furnishings over in the magazine and the reference. We're moving around some wires, but it's changing. It's going to be really cool. It's going to be 2 lounge areas with a table in the middle. And the law library moved over by the door where the Scan Pro used to be. So people will have more room between themselves. we're been down to 8 chairs being done with the reupholstering. So there's 4 chairs out right now. They're like the square sized one by the magazines. And then the lounge chairs, those bigger square ones, they're gonna be last. So I'm not sure if we're gonna have all the chairs out, because I wanted to have less chairs out. Plus, right now, it's not an issue because people just aren't hanging out in the, in the numbers that they used to. So it'll
That
be
may
really
change
nice.
with the winter coming.
Yeah. It'll be nice. We had a homeless guy since the summer. And he would read and he'd stay for a while and leave, but since the weather got bad, he started sleeping. So I emailed over to Amy Miller, and she ironically told me that this is terrible, but they shipped him to Bath actually the day before. So she thought that he'd be over in that library now. I was just like, oh my gosh.
Jeez.
So
Well, maybe
but here's
it's
the
a
thing,
vet
it
or
wasn't
something.
bothersome at all. He was fine. He had a place to sleep and get clean, He snored so loud, you guys. It was shocking.
Yeah.
Poor guy. So, knock on wood, there was that excitement too. Still waiting on the quote for the window installation for Marbles. I was going to call him again. It's really hard to get quotes on anything lately. So,
Yeah.
because
I think they're also really behind.
Yeah, I
Mhm.
work on it and then I forget about it. And then I'm like, oh, I got a call before the board meeting. And then I was sick. So I don't know. Okay. So lastly, I'm starting to put board packets on the website. It's not perfect yet because I'm just starting to do it and I didn't get everything on this packet for today. I didn't get it all on there, but I guess there's going to be some kind of newly passed law that I was hearing about it, Nyla, that they want everybody's board packets online. And I'm like, okay, we can do that. And so I figured out how to merge PDFs. And so that's what I'm doing. So.
Okay. Anybody have any questions?
I am late. I couldn't get it working.
Well,
It updated and I couldn't get it to work.
Hi,
you're
Connie.
here now.
Hey there.
Packets. Okay, we're on to standing committee reports. Has the finance committee met?
Yeah, they met on the 8th, I think. I forgot to put that on there.
Sounds right.
Yes, we met on the 8th. They met on the 8th.
And do they have anything they want to report or? Guess not.
I think everybody was fine with it, is what I came away from the meeting with, that they were fine with the budget as it was presented.
Mhm.
And we say.
Angela, do you remember anything else?
I just think we discussed that there was, because a staff person retired, there was a surplus that allowed us to, the service that we replaced the person with is cheaper than what the person
Mhm.
was getting. So that allowed us to redistribute the money and get the minimum wage that our workers get up quite a bit. That's where that money came from. That was the biggest discussion.
Yeah.
Good.
But that was a positive discussion. I mean, everybody was glad that that was able to happen.
Mm-hmm.
Okay. The policy review committee, was there
No.
anything going on with them?
No
No.
meeting.
None? Okay. Building committee?
Nothing.
Okay. Nominating committee?
We still have a board vacancy.
I know I've made calls to 3 different people, none of whom are interested. And they're people that are in the range of 40 to 45 years old, and it doesn't matter who I've asked. I've tried women, men, no interest at all. So
Mhm.
I don't know what we'd like to do about that, but I can keep calling people.
Can we put a sign on the door that says, you know, are you interested in becoming a library trustee?
We can do
And
that.
then-
I have a help wanted one up there now, but we can do that.
Okay,
Yeah.
and how about on our website?
Yeah, we can do that.
Angela, at one point Lynn put it in the paper.
Yeah, I remember you told me that before.
That's how I got on the board.
Yeah, me
I
too.
think that's how I got on too, as I noticed, I saw it in the paper.
Really?
Yep.
Okay.
I think that we've had, at one point, we went from 7 to 9, and we've had historically a hard time maintaining the 9. I don't know what the legality.
Oh, okay, so I put that
We'll have
on
to
our,
think about
in the
going
board
down.
packet. I put the copy of the charter and the bylaws, if you guys want to adjust that.
I
would
think
put
we
it up
should
on the
try to
screen, but it won't
advertise
go.
first.
So the charter says the number of trustees from 5 to not less than 5. Oh, gosh, sorry.
5 to 11.
I can't see it. 5, not more than 11. So not less than 5, not more than 11. And then the bylaws right now say the Board of Trustees shall be comprised of 9 members. So,
I think one of the problems has been for the people I've approached, nobody's interested in doing anything. Even when I say we're mostly meeting by Zoom, they're just not interested in doing that right now. And I don't blame them. I mean, I'm happy with Zoom, but they don't know us and they aren't interested in anything more in their life.
yeah.
Yeah,
I don't know if we're gonna be allowed to use Zoom starting in January. We'll have to see how that goes out, how that turns out. Because it's
Yeah.
going to expire, the law,
She may renew it depending on the numbers.
right? So we'll see
Um,
what happens.
Whose terms are up next year?
I don't have
Well,
that
mine
on
was up
my
last year.
computer, this computer. I'd have to look at work.
Okay. Because I sort of think mine is, and I'm not planning on renewing.
oh
And-
dear.
And I didn't intend to stay on, but I was reappointed because we have to have a quorum. So I did the oath of office early this year, but we have some health issues at our house and I just really need to be there.
Okay, all
Well, I think it's time to advertise big time then.
Yep.
right.
I think so.
Okay, I'll do that.
I know.
Maybe the newspaper would write an article about
Yeah.
us. That would be cheaper than putting an
Yeah,
ad in the
I
paper.
can write something up to submit.
Okay,
I know that we've tried to steer away from educators because it was very educator heavy for a while and there's still a few of us. But I mean, those are the people that I kind of know. So if we really just need some people, I can check around and see if I can find anybody who is interested. I don't know if they are, but I've got a couple people that maybe aren't teachers, but are still in the system, maybe would be interested. But like I said, I have no idea, if they're super busy or whatever, but I can get some feelers out there if people are fine with more educators.
I also know one that just recently retired that was more in the administration end, but she may be interested. Also, and it wouldn't be a teacher, it would be somebody that was like an assistant superintendent, way up there anyways. So it'd be a different perspective. I mean, if that's the resources I know too.
mhm.
I just thought of a friend that might be interested. I don't know. She's a huge reader and she loves the library, so maybe she'd be willing to consider it.
The other thing you could suggest, Angela, is ask each of your employees one-on-one. Do you have anyone who might be interested?
Sure, I'll do that.
Oh, it just shared.
Yeah,
Yeah, what's it sharing?
It's sharing now.
Ta-da!
yeah.
Jeez.
Oh dear.
It just wouldn't do it before. It had to
Oh,
make up
that's
its
cool.
mind.
There we go.
So there's my report and 9 members. So, and there's the agenda. And I, as you can see, I added that for the agenda, but we already did it. So,
Mhm.
okay.
Okay, anything else on the nominating committee? Personnel committee?
Meeting.
Okay. Okay, old business, the outside trim painting and glass pane replacement. I think you told us about not being able to get anybody to give you
I'll keep,
the cost.
I have to call Marbles again.
Okay,
He came over, he looked at everything. So,
they're
Let's
probably
have
busy
that.
too. Okay, Juneteenth and Indigenous Peoples' Day.
as you can see, it's down here. That's how it would look. Sorry.
Okay,
Didn't we do this at the last meeting?
No,
We did, but there was some confusion about,
No,
when
that,
and
that
where.
was the Christmas one. That's the
I
confusion.
think we talked about.
we
Yeah.
did.
So you guys have to vote to add Juneteenth and Indigenous peoples, the words.
Okay, instead of calling Columbus Day, it'll still be the same day, right?
I'm gonna do it
Right, you're really
slash.
only adding
Right,
One.
Juneteenth, because we already have the other, and if it needs to say that we're adding Juneteenth and renaming Columbus Day to be Indigenous, they already had that day, right?
Yeah.
yeah, I didn't want to rename it all together. I slashed it on there. I don't know.
Right,
But we're not adding that day, so you don't
Right,
want
you're just
employees,
changing the name.
yeah.
right.
Readjusting the name, yeah.
So then, this is Marty. I'll make a motion that we add Juneteenth, the federal holiday, as a day that the library is closed.
I second that, Diane.
Okay, is there any discussion? All in favor?
Aye.
Aye. Any opposed? Okey dokey.
And then, this is Marty again. I'll make a motion that we rename our Columbus Day holiday to, I don't even know how to say the word, slash
Indigenous.
Columbus
It's so
Day.
hard.
Indigenous.
That's good.
Who seconds?
I do this with
Ah.
Kristen.
Is there any discussion on that? All in favor?
Aye.
Aye.
Any opposed? Okay, it's passed also. Let's see, the tentative cost of the employment practices liability is $600 to $800 per year for one,
You skipped
Million.
one,
what is it? Oh,
the Christmas
Yes, I did.
holidays.
okay,
So
2021, 22 Christmas and New
Yeah.
Year's holidays.
the staff suggested
Um,
that because hardly anybody works on Saturdays.
Okay,
So,
We can't see the agenda on that part right now.
really?
Oh, now it's up there. Never mind, it
Yeah.
just went there now. Okay.
okay.
Sorry. So this way, everybody gets a holiday.
Are- Okay,
This
they're
is
all getting
Kristen.
paid.
I
for
will
her.
move that for the 21, 22 Christmas and New Year's holidays and are on Saturdays when 2 staff members work half days and when one more person works all day, we do what it says there below.
I second.
Thank you.
Is there any discussion? So they're all going to get paid for the holiday, even though
Yeah.
it
Mhm.
won't be on that day. Okay,
It'll be Friday.
okay. All in favor?
Aye.
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 Any opposed? Okay, it's passed. So now go on to the tentative cost of the employment practices liability.
Now, I had the paper to read to you the exact things, the difference between what we have and the new
Yeah.
one. And since I'm at home, I'm just gonna look it up on my email and see if I can read to you what Derek said. That helped me a lot. It was very simple. Okay. I would have had it right out for you. Okay. Oh my goodness. I asked him, I understand we have officers and directors type insurance coverage. Could you confirm and let me know the difference from employment practices liability insurance? Yes, we have directors and officers coverage. That coverage is in place if the board members and officers are directly sued by employees, vendors, competitors, customers, or other parties. Employment practices liability is for claims brought against the library for wrongful termination, discrimination, and harassment. So it is a little different, I think. That's what he explained to me. He sent an information sheet, which I sent to you guys, and it mixed up the two forms of insurance on the information sheet. It just jumbled them together. So I'm like, well, that's not helpful.
So Angela, do you think that we have any coverage as a result of these employees coming through civil service?
Well, that's what I was wondering. I'm like, if you wrongfully terminate or whatever, you can't, because they get a hearing, they get a civil service hearing.
Yeah, I'm not sure this is relevant to us because we have all civil service
Yeah.
employees.
But harassment is.
Yeah, harassment would be.
But harassment should be covered under our normal insurance.
Well,
It shouldn't be an add-on.
that's what he wrote me. So
It doesn't sound like it's covered.
Yeah, I mean, he's the expert and he's
Yeah.
saying it's not covered. He's telling you straight out, and we're only talking about $600-800 a year. We're not talking about some giant amount of money.
no, I think it's a good idea just to make sure that we have
I think
plenty
so
of
too. I
coverage.
mean, we're not paying like 8,000. We're talking about 800.
Yeah, right. You have a disgruntled employee or somebody that just gets mad because whatever, they can bring harassment or sexual misconduct or anything. It's very easy for them to do if they're,
Yeah, I mean, they just fill
Angry
out the
enough.
form. Also, like if you did go to a hearing, well, you'd have to pay for a lawyer to go with you, i.e. me. So,
So are we ready to hear a motion for this?
We'll make it, Kristen.
Yeah, I move that we pick up this, adding employment practices liability up to $1.1 million in coverage.
I'll
For the
second that, Valerie. Any more discussion?
I'll email
All in-
Derek and get it going.
Okay, all in favor?
Aye.
Aye.
Anyone opposed? Okay, it's passed. New business. The 2022-2023 Finance Committee proposed budget.
So that's in your packet. And then next month you will vote on that.
Okay,
Correct, because we have to have it for 30 days first.
okay. Is there anything else that anyone wants to bring up at this time or announce? Then we need a motion for adjournment.
This is Marty. I'll move we adjourn.
This is Kristen, I second.
All in favor?
Bye.
Aye.
Anybody opposed? Okay, thank you very much.
Have good Turkey days, everybody.
Oh,
Yeah,
yeah,
me too.
good weather. I want to go to Michigan.
Safe travels too.
Thank you. Got to go the long way because it's too expensive to go through Canada.
Will
Thank you
COVID
for running the
ever be
meeting.
over?
I don't know. You wonder, don't you?
Yep.
Thanks for running the meeting.
No
Thank
problem.
you, Val.
All right, bye, everybody.
Bye, everybody.
Thank
Have-
you, everybody. Have a good Thanksgiving.
You
You
guys too.
too.